All right, so we are live. Welcome back to the Entrepreneur Investor Connection. Today I'm talking about being prepared for bear markets. Right now, for the past year, if you've been in stocks, if you've been in crypto, you've had a good year. Like most people are up, right? Everywhere. What up? What up? And of course, I'm live everywhere. If you have any questions, definitely comments, put it anywhere you are at. Please like, subscribe, wherever you are. I just text everybody. If you want to know when I go live, miguelislive.com. You fill out that form and I'll text you when I go live. Some people have asked me for that, so I set that up. But today, what I'm really trying to get is strategies on how I'm thinking right now to be prepared for the next time that crash comes. And then sometimes when these crash comes, these crashes end up being what's called bear markets, where they stay for a long time, sometimes years, right? But there's a saying that I heard, and it actually made me think of today's episode, which is people make money in bull markets and people get rich in bear markets. So that was super interesting to me because when I heard that, it made sense, but it didn't make sense. So I had to research it, right? And basically what that means is if you come up with a strategy that works in bear markets, in bull markets, you do way better, right? Because if in a bear market things are here and you're still gaining, you're making money either passively or over time, buying more assets. When things jump like they normally do, you make a lot more money in those jumps, right? So what I'm looking to do in this next bear market, which some people believe we may be in right now, right? So that's a thing to even understand. Like, are we in one right now? Do you believe we're in one right now? I tend to kind of think we could be in one, but I think in the summer we will find out if we're in a bear market or not, because there's a saying called there's a hashtag going around called decentralized finance summer, DeFi summer. And if DeFi summer comes around and we are still in this bear market, then I'm pretty sure that means we're in a bear market for the whole for a few more months. So David, I don't know if you want to come to the stage on Clubhouse and ask any questions, but basically what I'm talking about today is I'm really trying to create a scenario where people understand what they are thinking about and how to implement in a bear market, which means things are not going as volatile as they've been stock or crypto, right? So right now, because I'm mostly talking about crypto and most people are like watching me for crypto, I'm starting to come up with strategies. And then also, if you're not involved yet, go to Cracking Crypto Club, crackingcrypto.club. We meet 2 times a month. Today we're meeting, and I'm going to show people what I'm doing, literally show wallets and all that. But the idea is you got to figure out how to make money right now in a down market. And how that works in crypto specifically is things called yield farming and also accumulating bigger positions in coins that you really believe in, right? So for instance, with me, one of my strategies right now is I've been figuring out how day traders time the market, right? So the way day traders time the market is, at least one day trader that's working with me and showing me, is they use this chart called MACD, right? It's in the I showed it in a previous episode, and maybe I'll show it again if people want me to see it, want me to show it. It's a chart that shows when people are really buying and selling. It's not about the price. It's more about how much people are buying and selling at the moment. You could do it by day, by minute, by year. So what I'm looking at now is I'm only looking at buying when the MACD chart shows that things are heading down, right? Because what I've noticed about myself and most people is that people buy when it's up. And then when it goes down, people don't buy as much. But what that sentence means, people make money in bull markets, but get rich in bear markets, is if you're buying, let's say you bought Bitcoin at the top and it was 60 grand. Then it went down for a minute under 20, under 30 grand. Let's say you bought it for 30 grand and you bought 2 times as much. When it comes back up, you have 2 versus the person who bought it here only had 1. So you make double what they make by waiting and really trying to understand during a bad time is the better time to buy, right? So what's happening now is most people don't really understand that, really. They just go by their emotions. So Stone, I'm not sure what your current scenario is, if you want to talk about or ask any questions based on what you're doing, what you're seeing. But this is another big thing about bear markets. You want to diversify, right? You don't want, basically one of the major lessons I learned off that last crash is I wish, and I'm going to on the next jump, I'm going to pull some of that money out and put it into real estate, right? I'm going to start using these gains and diversifying where money comes from for my retirement, right? Because when I look at this stuff, I'm trading for my retirement, right? I'm not trading to make a living off of it. I'm trying to build my retirement fund so I can retire. So what does that mean? That means I need to have income coming in that I don't need to work, right? So crypto, stock, sure, you could do that with dividends and stock. Crypto, you could do that with yield farms and these coins that give you free coin, and then you can sell those coins. For real estate, you can get income every month, right? So if I've been working on the leisure fund for a long time. Links are everywhere. The leisure fund is something I'm really looking at, which we've been working on the whole time. And right now I have partners in the Dominican Republic looking for properties for when this next jump happens, we pull money and start purchasing properties, because that is really what you want to make sure you start to do in a bear market. You want to look and say, what are ways that I diversify my income, right? So with me, of course, real estate is one of the safest assets, right? And then you got the most volatile in crypto. So if you're going to play in both those worlds, you want to make sure that you are covering your bases, right? So even if you just look within those 2 worlds, right? If you say, look, I'm just going to be in crypto, I don't want real estate. You can even diversify within crypto to be safer, right? You diversify up. All right. Yep. So within crypto, I'm going to talk to you about some of the least volatile assets, right? Bitcoin is one of the least volatile assets. It's volatile, but it's one of the least volatile, but it is the biggest dog on the block. You got me thinking different streams. Yeah. What type of streams you looking at, Stone? Because real estate is kind of a no-brainer. But of course, that's part of why I want to have these conversations. I want to know what people are thinking. Like, do you think of other streams in a way that will help you, maintain? What if I told you right now the stock market and the crypto market are not going to grow more? They're going to stay pretty much where they are for the next few years. Let's say if I told you for 2 years, they're going to stay where it is right now. What would you do? Right? For me, what I'm looking at is, okay, how can I accumulate more based on what I have right now? Right? So what I mean by that is, how do I, with the money that comes in from me working and the current assets I have, how can I create more income for myself? So this is where I look at the crypto that I've bought, and I've been telling everybody for a while, buying crypto that you can borrow off of is the move for times like this, because the way you could create more revenue for yourself is you can borrow off your crypto and buy a real estate property, which is what I'm telling you right now. When you think about the diversification of your investments, most people understand, I would love to buy a property and rent it out or do vacation real estate like I do. But how could I afford that? Well, if you made a good winning on your crypto, you can borrow off of that and buy. And if it's going to stay where it's going to stay, you're not really risking. One thing I did see, though, when the last crash, which was like 2 weeks ago now, is make sure that when you're borrowing against your crypto, you're not going too high into your loan to value ratio, because when a quick crash like that comes, it can really liquidate all your assets. So you want to play within a certain percentage range, right? So of course, tonight on crackingcryptoclub.club, we're gonna go over that. But right now, for everyone else listening, I want to basically break down to you how this market pretty much works. And it's all stock market works the same way, by the way. The way people get rich is by somebody is losing when you win in the stock and crypto market. So if you don't understand what I mean, it means if I buy it at $1 and then you buy it off me for $1.50, I won, right? Because I paid $1, you paid $1.50. I made 50 cents off of you, right? So in a bull market, we are seeing a lot of that, and everybody feels like they're up. But there are people losing, right? There's people losing every time they sell. And a lot of times what happens is when they see these dips, that's when they sell. So the what they call the whales, the super rich, they understand this very well. So they play on the emotions of most people that don't understand this, and they win. But why I'm talking about this today is I want you guys to start understanding how to win off that and be in a position when the bear markets are here to win and continue to win, right? So one of those ways is look for the projects that you know will survive, right? Bitcoin is going to survive. Ethereum more than likely will survive, right? So put dollar cost average into Flossie Casey. What's up, man? Yeah. So anyone on the Instagram, the King, if you want to come up and talk, let me know. I invite you. I don't know if I did already. Flossie, any questions? Any questions for anybody? But the idea right now, what I'm talking about is how to prepare in a time where there may not be the jumps that you hope for. Like right now, if you listened to my last show, we talked about AMC. Let me see where AMC is. Where's AMC right now? Did anybody buy AMC? Trying to time this whole like pump squeeze situation. Let me see. It looks like it's down. All right, it's down 9% today, but still I'm up 60% from Friday. So depending on when you bought it, you might be in a good spot. But when things are down, what do? You don't stop investing. That's the best time to invest, right? You're not going to get the big gains that most people expect right this second. People are expecting 10x, 20x. But if you, what they call dollar cost average, right? You look at the projects that you believe are going to survive, not these crazy coins that you think are going to go up 1,800% in a week. You look at the steady, good stuff that you know is going to be around, that's going to stay steady gaining. That's better than having your cash in a bank, because as we see, and I'm seeing this more and more as I walk around and go do things, inflation is here right now. Like you see a lot of things cost more money than they did before the pandemic, man. So I did, then sold. What did you? Oh, you sold the AMC already? I'm going to wait a little bit longer. I'm going to try to at least 2x my money, maybe 3x my money. But again, these scenarios, I try to point out the ones that I see, and I make content around them. And I've told you guys when I've seen them. I've told you about Matic. Matic went up crazy. I told you about AMC because of Wall Street bets. There's another coin I told you, like I'm kind of playing around with, called TEL, TEL. I could see that going up. Yield farming stable coins on Polygon is not a bad idea. Yes. All right, Floss, Casey. All right, you up on it. So what he just said there is exactly what I'm doing. So what he said, yield farming stable coins on, what'd you say? Did you say the place? All right, on Polygon. Polygon is Matic. When I tell you buy Matic, when I told you why Matic I thought was going to explode, it was because of what he just said. I knew that because the gas fee was like almost nothing, people are going to start using Polygon to yield farm. And he's right. Right now, there's certain sites, and I don't look at it every single day, but there's certain sites that right now are giving 9% interest on your money, plus extra percent in coins. So I'm going to give you the example. There's this website called curve.fi, Curve Finance. Stable coins are like dollars. So let's say you have $10. Let's say you have $1,000 in the bank. The bank is giving you 0.01% interest. On curve.finance or curve.fi, they're giving, from the last time I looked, it was like 7 or 8% interest versus 0.01 in stable coin. So a stable coin is backed by $1 most times. So if you have one USDC, it's like having $1. So if you put $1,000 on curve.finance, they're going to give you 8%. So that means $80 a year versus your bank would probably give you not even one. No, one. I think maybe even one. Not even one. No, not even one. Not even one. Right? So, okay. So now, if you go on Curve and you put your $1,000 of USDC on Curve and they give you 8% versus having your money in the bank, right there, you're creating money versus losing, right? On top of that, Curve on the Polygon network, which is why I told everybody buy Matic, and is what we show people how to do on the Cracking Crypto Club. They give you 30%, at least last time I checked, in Matic. So think about what I'm telling you here. $1,000. First, you're going to make 80 in dollars. Then they're going to give you another 300 in Matic at the current price. So if you're getting Matic for free right now, and one day Matic goes up to $10, which there's people that believe it, who knows, not financial advice, that means you would have made $3,000 plus the 80 off that money. Think about how crazy that is, right? Isn't USD coin so on Coinbase they are giving, Coinbase is giving 0.15%, not 15%. Big difference, right? On curve.finance they're giving 8%, not 0.8, 8 plus 30, at least the last time I checked, 30% in Matic. Remember, you saw how Matic is going up, right? So imagine if you got Matic when it was, which I was doing it, I was already doing it when Matic was in the 80-cent range. So let's say they were giving me, just to make the math easy, 10 free Matic a day. Let's just say that. Of course, it depends on how much money you have in there, of course, right? Give you more based on how much you have. 10 free Matic a day. Now Matic is worth almost $2 a coin. So instead of, this is where I know it becomes like a mental math gymnastics game. If you were getting interest in the dollar USDC, like Curve is giving you that dollar only, imagine you were only getting that dollar, I would only have $10 a day. But because they were giving me Matic, I have $20 because the value of Matic grew faster than the dollar. The dollar value is only going down. The Matic value is going up. It goes up and down though, right? So you gotta be able to ride those waves. But the idea is, if you can be yield farming, like my man Flossie Casey says, on Polygon, getting free Matic, you're basically getting free money that's worth more than dollars, right? It's already worth more than dollars, and it's going to continue to be worth more than dollars because investments go up in value, dollars go down in value, right? So this is where right now, Flossie got it. You got to find yield farms in crypto and just use that to get free money, put more money in there, get more free money. And what you do is with that money, he said it, like if you listen on the YouTube, you got it down. You borrow off Aave. I know this is where the Cracking Crypto Club, we get busy, but you can borrow off of your crypto. I said that in the beginning. So let's say, I'm going to make the math easy. Let's say you have $100,000 right now worth of crypto because you did good. You put in money when it was low and now it's high. You can go right now on Aave.com. He said it. And borrow up to $60,000 from your $100,000. You don't want to do that, but you can, right? No paperwork, no nothing. The money just comes into your bank account instantly, right? But if the markets go down, you can lose that. I told the story. I'm not sure if anybody heard it, but there was a guy that I know that had $1.5 million in Ethereum. He borrowed against the 1.5, took out a $500,000 loan, bought a property in Mexico. The crash happened. When the crash happened, his loan was taken. They took his 1.5 million because it went down below, because let's say the value of Ethereum goes down, the value of that loan becomes the same amount and they take your Ethereum. So it was 1.5 million, then it became 500,000. So they said, okay, the loan is going to get called. So they took his 1.5 million, which he felt like it was, but at that point it was 500,000. But this is why I'm saying the diversification matters. He still has that property though. If he would have just been in crypto, he would have lost everything. If he would have borrowed 500,000 to buy more crypto, he would have lost everything. But he borrowed the 500,000 to buy a property in Mexico. So now you're connecting the dots of what I'm saying about the leisure fund and what I'm working on, right? Like if you take the crypto gains and buy real estate property that makes you money, you're diversifying. You're kind of evening your opportunity to not get wiped out, right? So this is where, like, if this bear market is starting, and I don't think it is, but I'm just starting to like plan for it myself, just in case we are in it, because nobody knows. Nobody knows. I don't care how rich you are. Nobody knows, right? You can ask the richest person in the world. They don't know. Oh, my sons are watching. Hi. I don't know which one you are, but love you. So because I make an account that they all share. So the idea is right now, look for ways to create little gains. Those little gains over time turn into big gains. Why is that? Remember what I told you about Matic, right? Let's say today, Matic is $2, just to make the math easy. And every day you're accumulating more free Matic based on being on Curve. And he said it, Aave gives you free Matic too. For borrowing money, they give you free Matic. I have clients that are getting 50 free Matic every day because they're borrowing so much. They have so much money in Aave. They're borrowing so much. They're getting 50 free Matic a day. Think about what I just told you. It's worth $2 right now. That means they're getting $100 a day right now. Let's say 6 months, Matic's worth $5. You do that math. Whip out the calculator. It's crazy. Facts. So Flossie, you in the game. What else you got? What's it? So call out a coin, Flossie. I want to know what some good coins you use. You're adding to the portfolio. Do you do Matic? Do you invest in Matic as well? Anybody on the Clubhouse, of course, the conversation is always welcome. Anybody on Instagram? Oh, so what were you saying? Oh, about Stone? I'm not sure. Hey, Amy. Yeah. So if nobody has any questions, I'm gonna just keep going about some of these opportunities. Like the Curve opportunity is kind of crazy, and of course, another big thing to understand with all of this is it's not gonna last forever. Helium. You do helium? Okay. I've been hearing a lot about helium. I gotta do the deep dive on helium. Helium is the one where they have like the networks, right? They do like the Wi-Fi networks, I think. What was I saying? Forgot what I was saying. Oh, Curve. So Curve is what's called a decentralized bank in a way, right? You put money in it. It gives you interest on having that money in there. Why? Why would they give you 8% plus 30% in Matic? Because they're lending it out and they're making more off lending it out than they're paying you. That's how banks work. That's why a bank gives you that percent. They say, put your money in here, keep it in here. The more, and then they also, sometimes they have limits. If you don't have by this much, they're going to charge you every month. Why do you think that is? They want to make sure you have as much in there as possible so they can lend it out and make a lot more on it than you. So now what crypto is allowed is we all can be our own banks. Every one of us, I literally have a wallet where I did it with $10 just to show people you don't need to be a millionaire to do this. $10, you can be your own bank getting free Matic every day with $10. That's crazy, right? So part of why I keep talking about this, like as a innovation that I really think people need to like make sure they understand, is because right now the interest is out of this world and it's not going to stay that way. The more people come into the space and understand this, They don't need to incentivize as many people to do it. So they're going to lower those interest rates. Right now, Aave is giving free Matic to anyone that deposits Bitcoin, Ethereum, Matic, stable coins for the next year until 2022. Around this time, I think they're going to give free Matic away if you're creating your own bank, basically. Think about that. And if you believe, I honestly believe, and again, not financial advice, I am in heavy belief that Matic will be worth $5 one day. I don't know how long. It could be 5 years, 10 years, 1 year, 6 months, who knows? If Matic is worth $5 eventually, and I'm telling you right now, you can make at least one free Matic a day with maybe, I can't even do the math, maybe like within $3,000, $2,000-$3,000, you get one a day. Not many things you're going to make that much a day with that little money. And that's not a little money, but it's not like what you would think, right? Like if you had $3,000 in the bank right now, you'd be getting like 3 pennies a month type thing, right? That's a very big difference. So of course, I want to make it a conversation if possible, but if nobody really has any questions, I want to basically tell you again what I'm doing. Last time please, what's your take on Cardano? All right, there you go. Been holding on to it for a while. It seems stagnant. So is it what I think Cardano? I think I own Cardano too. What I think about Cardano is a great opportunity because it doesn't even exist yet, right? So if you look at the value of it, it's worth that right now, and nothing is out yet. When it starts being used, there's no way, in my opinion, again, not a financial advisor, there's almost no way it don't go up. It's just getting ramped up. Yeah, like Najim is saying, I'm sorry, I'm saying your name wrong. I don't see a way that it goes down. Actually, that's wrong. Because it doesn't exist, there's one very worst case scenario. It comes out and it flops. It doesn't work, which I don't think will be the case because they've taken so long to launch it. I cannot see a way where they launch it and it doesn't work, right? But if it does anything, literally anything, which I believe it will do a lot of the same things that Ethereum does, a lot of the same things Matic does, it will go up. How much it goes up, that depends on a lot of different factors. It depends on how much we believe in it, because whether you understand it or not, most of the stock price or the coin price is based on how we feel about the stock or the coin. Because the more we buy it, the more value it gets. The less we buy it, the less value it gets. So when these companies do stuff, it helps the public perception, so we buy more. But if it hurts the public perception, we sell it, so it goes down. It's not as connected as most people think to what the company makes. It's more about the public perception, because this is interesting. I did not know this till lately. Hey, hi. ETH Mafia is when you buy stock, you're just playing the game of what I said in the beginning. People are trading against each other. So I'm buying it for $1. I'm trying to sell it to the next person for $1.50. And that person paid $1.50. I paid $1. I won $50 off that person. None of this has to do with the company at all. You didn't help the company in any way. You just created $50 by selling this to somebody else. That's really what these markets are about. There are ways to invest directly into these companies, but most of them it's not easy. You got to be rich. But now there are ways that are coming out, like equity crowdfunding, which is something I'm involved in too. You can invest directly in a company like that. But when you buy the stock, it's about public perception and how people feel about it, and it keeps bringing it up or bringing it down based on what people are willing to pay for it. So Curve.finance, yes, is that the site? Yes, Curve.finance. Curve.fi is the one where you put your stable coin, and they give you more stable coin. So basically, a stable coin is $1. If you didn't hear before, stable coin, gotta bounce, keep preaching. Good stuff. Keep stacking Matic. Thank you, Flossie Casey. So yeah, stable coin is like $1. You can put it on curve.finance and they give you, again, it's variable. So the last time I looked, I think it was about 8% interest, and they were giving 30% in Matic. So if you think Matic is going to be worth more than $1, which one would you rather get? Right? I'd rather get Matic as interest than $1, right? But you don't have to choose, because on Curve they're giving you both, right? And that's not going to be forever. So, all right, ETH Mafia. I'd wait another dip and buy more ADA. Yeah, that's basically what I'm doing right now. What I'm really trying to learn during this potential bear market is how to really train myself on how to only buy on the downs. Because I noticed about myself, and I noticed about everybody else, people buy when it's going up. People sell when it's going down, instead of the opposite. Buy when it's going down, sell when it's going up. So what I'm personally planning on doing is training myself to do that in any market, especially a bear market, right? So right now, you see things are creeping back up slowly, but there could be another crash. But I'm looking at that whole MACD chart, and I'm reading that, and I'm only buying when the chart shows red. Dark red mostly, light red sometimes too. I showed that on another video. If you guys want more of that, let me know. I'll try to show it again. Stone, I prefer using my computer. All right, wait, let me see. People are talking in the chat. I'll wait to buy another dip. Stone, what Stone asked? Sorry. Is it bad to use the smartphone? I don't think so. I think whatever makes you move the fastest. I'm lucky enough to work on a computer all day, so I can use both. But sometimes I'm out. Sometimes I'm playing with my kids outside, and I'm like, oh, but I have it all set up to be able to do it anywhere. Because sometimes, look, what if you lose your phone? You got to have it on your computer. What if you lose your computer? You got to be able to have your phone. Don't only be able to do this stuff in one place, because it moves so fast that you wouldn't want to be like subjected to only one place being able to do this, you know? So, okay, sorry. Oh man. So, yeah, so okay, I'm looking interesting. So would it be safe to bug some more now? So interesting. So should it be safe to buy some more now? Yeah. Again, I would look at the chart and see, do you think it's going down right now versus going up? I know I got in before it was $1. I know people that got in when it was 3 cents, right? So right now, it definitely, I believe, is going to go higher than it is right now. But again, I'm trying to train myself to not buy on the ups. There's always ups and downs. So it's like an ocean. If you look at these charts, it's always ups and downs, always ups and downs. It's never staying the same price. So if you really learn how to time the ups and downs, if you're only buying on the downs, you're going to make more money, right? But what happens is public perception, again, is what makes the ups. So it's all these people buying as it's going up. And then people sell, buy, sell, right? That's what these waves are when you see them, right? So if you start saying, okay, I want to buy it, but I'm not going to buy it right this second. I'm going to wait till I see a drop. Not a huge one. A drop could be a few cents, but that's where you got to understand. Like, I'm starting to really train myself to look at these charts. You can use a site called TradingView, which is what I just started learning how to use. But a lot of these, like Binance has it too. A lot of these exchanges have charts. So you can look at the chart up to the day, the minute, the hour, the year, and say, okay, right now I'm trying to look by day. So I'll go into a chart and say, okay, I really like this coin. I want to buy more of it. But again, another big strategy I have right now is I'm only buying coins that I could borrow off of right now, right? Why is that? Because when I want to buy some of those coins that I don't believe in as much, I'll buy them with borrowed money instead of my money. It's kind of the same idea of like properties, right? Like, do you want to sell your house to buy a rental property? Or do you want to borrow off your house to buy a rental property, right? Which one is more important to make sure you have, right? your own home, right? So to most, right? I mean, even me, that's not as important as a rental property in my book. But the idea is, thank you, Nancy. MetaMask. I have a problem buying through my wallet. Do you MetaMask? Stone. I'm not sure how. Are you using the Polygon network or the Ethereum network? So yeah, basically, right now the idea I see is if you can figure out how to start learning how this all works, right? And even just this conversation here is me just telling you what I see, because I'm not a 20-year expert. I'm a few months, maybe years ahead of you, and I'm learning still every day. I didn't learn about the MACD chart till last week. This trader showed it to me, and I'm like, how doesn't everybody know about this? Like, if you Google MACD on YouTube, you'll see what I mean. But basically, it's a chart that shows really when people are buying and selling, which makes like total sense. Why is that not everywhere? I'll tell you why. They don't want everybody to know that, you know? So the more you understand how that works and you use that timing to only buy on the dips, you can do that even in a bear market, because the dip's just not going to be as high and low. They're still going to be there though. So if I told you sell, buy, and I'm not saying sell all your money, like maybe another big thing I learned of not doing it is start figuring out how your percentage of sale works. So for me, I've been thinking about lately selling about 10% of whatever I make every time I make it. So if I look and in a month I made $1,000, I'm going to sell $100 worth and make a stable coin just so I have it there. And maybe I put it on Curve Finance to get interest, or I keep it in the wallet just in case there's a crash. So if there's a crash, and I've done that enough months, let's say in 10 months, I have $1,000, right? And then Bitcoin drops and I buy $1,000 worth of Bitcoin, right? When it's lowest, right? But I have it there for that opportunity, because a lot of people, when it crashed last time, they weren't ready. They didn't have any money, right? Because they spent all their money when it was high. So when it crashed, they didn't have money to play with. So that was a huge lesson for me. I was like, you know what? Never again. I was lucky that I was able to borrow, actually. I didn't have any more cash too, because I was buying too, but I was able to borrow off of my crypto to buy more crypto when it was down. And then when it came back up, I sold it and made money, right? But again, you don't just learn this stuff. You're going to lose money. You're going to make money. You're going to play around. But there's almost no way you can convince yourself at this point that you don't need to know this. I like in a way, I just look at all this stuff and like it's really sad that they don't teach us this in school early, like young, because this is really how the world works. Like, people don't make money from working. The richest people in the world don't have jobs that they go to 9 to 5. They do this. They either own the company that you're bringing up and down in value, or they trade this stuff. And most of the time they do both. That's why I say entrepreneur and investor connection, right? If you're not looking at it like an entrepreneur and an investor, you're not in a good position, because you are just being taken advantage of by the entrepreneurs and investors that are basically extracting your money into their pocket. That's how they get rich. It's not like that much new money is coming into the world every day. In America, there's a lot, but it's not enough to make Jeff Bezos almost 3 times richer during the pandemic, right? How does that happen? Because we were buying a lot of things, right, on Amazon. So that money was going from our pockets to his, right? And that's just how it works. And then if you look at the stocks, same thing. And again, when they look at his net worth, they don't look at how much money he has in the bank. They look at his shares of ownership in Amazon, right? The only reason, hey, I don't know who that is, but hey, the only reason him and Musk keep going like this is because the value of Tesla and the value of Amazon, they keep going like this, right? So their real net worth is based on their stock ownership of that company. You can do the Warren Buffett style, where Warren Buffett doesn't, at least that I know of. Hey, I'm good. Warren Buffett if you have any questions, definitely put it in the chat. Anybody wants to talk on the Clubhouse, definitely come through. Warren Buffett doesn't make his money by owning Apple internally. He owns the stock. He trades the stock. He knows more people are going to buy it at a higher price than he paid for it. And he became a billionaire just doing that, right? He does acquire companies too. He owns like Geico and stuff like that. But a lot of his wealth came from owning stock, right? So if you understand this stuff and know how to like start to train yourself to look at it in a way that they look at it, you're just going to be in a better position, especially like if this is a bear market. And right now it feels like one. The real true test is going to be the summer. Like when we're almost there, right? It's June. I say by the time July comes, if we're still in this like not big jumps, we're probably in a bear market. I believe though in the summer we're going to make some big jumps. But I'm planning on that by planning like we're in a bear market. What do I mean? If you heard me, you understand what I'm saying. I'm saying right now, every time there's a little jump, I'm going to take 10% of my gain and put it in stablecoin. Then if there's ever a dip like this, buy it, sell it, right? So that's my strategy, not a financial advisor, my strategy. Some people would say, yeah, but what about taxes? From what I know, and again, speak to your accountant and your financial advisor, you only pay taxes on money you make. And if you make money in less than a year on a stock or a crypto that you bought, so if you bought a stock and you hold it less than a year, you're going to pay the higher end capital gains. Sure. What's the worry there? People get scared of that. Oh, but you're going to have to pay taxes. Oh my God, you're going to have to pay taxes. Did you know that the tax percent is just like if you had a job? So it's like you're worried about making money because of the taxes that you already pay percentage wise. So it's like, why would you be worried about making more money? It's like if your job just gave you a raise, you're going to pay the same amount of taxes. So why worry about that? Take your gain if you need it, if you want it. If you can hold out and not take gains, you're going to make more money, of course. But then when you look at the crashes, and this is why I'm doing it, I was like, wow, what if none of that money ever comes back? At one point, it was so high. If I would have took out some of the gains, I would have been really good, especially when the crash happened. If I would have had a lot of those gains when the crash happened and Bitcoin was on 29,000, Ethereum was only under 2,000, Matic was 70 cents. If I had a big chunk of money to buy then, and then it all went back up, I would have made a lot more money. So overall, my strategy is to act like it's always a bear market. Because if you act like it's always a bear market and take out your percentage gains, every time there's an up, take your percentage gain every time. Then when the crash comes, you can really win, or you can borrow off that money or get interest off that money, especially in crypto land. This is why I like cryptocurrency so much compared to other assets. But nothing kind of beats real estate because you get that money every month, right? If you buy a property that people are borrowing or renting from you, you get actual cash every month. And then you can throw that cash back into the markets, right? So again, my final breakdown. You want to basically understand how this market works, the ups and downs. Start looking at it. Try to understand the timing. Use that MACD chart. Look it up. MACD. Understand that chart. When you understand that chart, you will start to understand the waves. And if you can only buy on the waves going down instead of the waves going up, you're just going to make more money over time. Even if you only make 1% more by doing that every single time you buy, you look up and 10, 20, 30 years from now, that's a lot of extra percent that you made, right? So that's the first step. But then what do you do? When you are getting on the ups, if you don't need it, leave it. But if you really want to take the most advantage of it, and of course, this is like a timing thing, which is kind of a trader idea. But I don't view myself as a trader. Maybe I am, and I don't view myself as that, but I view myself as a long-term investor. So what I'm starting to do is on that drop, I'm gonna dollar cost average. It's not like I'm gonna put a big chunk of money in one time. Nope. Every time I see it, I'll put in a certain amount. Go up, I'll take 10% of that winning out. Keep it in a coin, stable coin. This is in crypto. In stock, you do the same thing. With AMC, I'm up. I'll probably take a few bucks out of that and say, okay, maybe I'll put that in Bitcoin, right? So diversify, right? I made some money from stock, but I'll put it in crypto, put it in real estate, right? But okay, sometimes people are like, oh yeah, but if you only make $100, how are you going to put it in real estate? There's ways. Stay tuned. There's ways. I'll show you eventually. But the idea is you treat everything like a bear market, you will be in a better position. Learn how to ride the wave on the way down, buy on the way up, take a little bit of profit, keep it there, or use it. But the beauty of crypto, you could take that USDC, you can gain interest on it or borrow against it or both, right? So let's say every month, math easy, you're making $10,000 a month off your ups and downs, and you take $1,000, you can borrow $500 off $1,000. And because of it's a stable coin, you don't really worry about the market crashing. You know, you just got to pay back that $500, right? And you have a long time to pay it because the interest is like 3-4%. And it's not like they even charge you a monthly fee. This is why you really got to understand this. So, and tonight we're going live, crackingcrypto.club. If you're not a part of the army we have building our own banks, go to crackingcrypto.club and learn how to do it. Tonight we're going to really start showing piece by piece how to do it. Hopefully this was helpful for you guys. And if you have any questions, DM me, chat, whatever it takes. I'm trying to help as many people get this going. Ozzy, what's up? Mac D, yes, Scoop Mac D, MACD, yes. For you to noodle on later. All right, CoinDesk. All right, I can't click that link right this second, but thank you, Ozzy. I'm gonna check that in the comments later. What time? So tonight we go live at 7:00. It's a Zoom, private Zoom, because it's like financial, like there's wallets being shown and everything, so we can't do that publicly. And I got multiple people helping people get their wallets right, helping people get their banks set up. So if you're interested, go to crackingcrypto.club. We meet twice a month. There's a online community, chat community, where we help people all month. We text people when it's good time to buy. There's all kind of cool stuff, trying to grow it. So looking forward to seeing some of you there. Thank you. See you guys on Sunday. Sunday, I'm calling it. I came up with a good name for this. It's going to be funny. We're doing Sundays. It's going to be called Wake and Cake Sundays. So we're going to wake up on Sundays and figure out how to cake for the weekend, for the next week coming. So hope to see you guys there. Wake and Cake Sundays, 10:00. All right. Thank you for everybody who came by. Thank you so much for listening. And hopefully you learned some stuff and you're going to make some more money. Thank you.